Good morning, traders, and welcome to the morning Jumpstart. Time to go over the US markets and the key levels for our major markets we're looking at and just what action we could expect going forward. So we'll kick it off with the ASX 200 as usual. You can see the market actually pushed down and we had a bit of a bounce coming to the close of the ASX session during Asian markets. And then the Europe opened and it actually grounded its way back up again and took out those highs, minor little highs inside, retested a level around 72.48 before sinking through the US session into the US close. So as we stand at the moment, we're pressing down to that 71.60 zone. It looks like the bears are putting pressure back on. What I'd be looking for today is more just a bit of a continuation. I think we'll just get that right. Let's just go back here from highs to lows. So that's our first leg down. If we're looking for a secondary leg down, we're sort of looking for another push back to 71.08. Whether that happens today, I mean, that's only a 60-point move. We're expecting the market to open down about 30 or so. So it could easily get a bit of a run on into those lows quite easily. I mean, what you'd like to see on the open is if you're going to go short anyway, a bit of a pop. See if it retests 71.95 from below, maybe squeeze out a few of these sellers and then roll over. If not, we could just actually flush here and bounce straight back up. You never know what's going to happen on the open. You never know how the market's going to take it from one day to another. But generally at the moment, the pressure's on. Okay, there's a few inflationary concerns. As we know, Ukrainian issues, concerns there as well. So there's enough concerns you would think that a lot of people wanting to take some risk off the table. Okay, let's get on to the Dow and what happened in the US. Now, we're looking at this coming into the open. That was your big sell-off from the previous session. Then I was looking for really a bit of a bounce, a bit of a squeeze on these sellers coming into the US Open, and that's exactly what happened. Okay, we've got a bit of a bounce here, suck it in some buyers, some bargain hunters, because we're all trained to do that at the moment in the US, especially trying to pick those bottoms, look at buy the dip sort of mentality. But at the moment, I'm feeling it's a little bit different. The way we've got this shoulder, what I'll call this is a retest fail. So you got to tap on that level again, went through it, bat straight back up, reacted down and up off, down off that level, and then we've gone straight back up and through, fluffed through that level. Okay, that was 35,675, just popped up through that level, but I thought that was a setup prior to that CPI number. Okay, and the CPI number is coming out a lot more stronger than expected. Inflationary is definitely sticking around. Inflationary numbers are stronger. It's just concerning for markets at the moment. Then we've got that sell-off bounce. We've got that little shoulder trade, and the amount of markets heading down. Okay, so we're definitely the bears are in charge at the moment, taking out that level at 34,830. It's whether or not we can sort of what we call back and fill, pop back up, maybe retest in here, flush out a few of these shorts, build up a few longs to trap, and then we roll over again. But we'll just wait and see what happens there. But like I said, to me, if you get out into longer term charts, just go to a 4-hourly chart. Close to a daily, you've got big move down, big pop up. So that's, to me, we're starting to confirm a major shoulder. So that opens the door for a really, really big move down. Not saying that's going to happen, but it just opens the door for something like that. And we could be heading right back down to these key levels around here, around say 32,000. That's a couple of 3,000 point drop from here. So just be wary if you're looking to buy, buy on confirmation that we're starting to hold support. When we could easily hold here at 34,830, but just wait for some sort of confirmation. US tech, the Nasdaq, same sort of scenario. You've got move down, pop back up, start the hold in here, pop back up. We've got a lower high in here, so there's easily a move down on the cards, if you ask me. Looking for that kind of situation. We could have just made that, but I'm expecting an extension into 13,915 area. Okay, whether we come back up, retest 15,545. So if you're looking for a short opportunity, I would be looking out for short, potentially through here. You've got some levels, just some interesting levels through here. You might just want to see if the market pops up. What it's doing is two things. It's suckering in some longs, some buyers, coming in, squeezing out some sellers, turns around and reverses on them, and just starts to roll back into that 13,915 area. Okay, the S&P, like I said, the broader market not looking too crash hot at the moment at all. Okay, you've got testing here, fluffed around that area, retest a couple of times, tried to hold it, straight back down. Okay, went straight back down, bit of a nosedive, held 42.96, lifted first leg up. That was your secondary leg up. Should have taken us to 47.43 if it was a strong market. It's not. At this market again, 45.90. Sorry, that level, it's failing. Okay, so you really got to be concerned that we are going to extend into that 42.96 area once more. Okay, so definitely the pressure's on. Failed here again, lower high, extend that move. I would expect it really to get a bit of a run on to the downside. DAX, Okay, that's your downtrend. Held. We're thinking maybe it was going to start to pop up here. You got some levels, higher lows holding, but it's flushed down. We bounced and then failed. Okay, so it's retested into 15,125. I would expect, like, I would want to see if I'm going to short it. It'd be tough to short on the open, considering it's quite stretched. But shorting into that down here into a support zone is a tough gig. You want to see some sort of buying pressure pop up before the open, say maybe through the Asian session, maybe into the start of the European session, get some sellers squeezed out of the market, pop back up, drag in some buyers just to trap them and start to roll over. Those buyers off that level have to get squeezed out, and that could trigger a move down. Okay, but all in all, that trend is down. It's not looking so crash hot. If it does start to hold 15,125, great. 15,05, 15,000 test, that's fine. It's not too bad, but let's just get onto a daily. It's still, that action there is not so great at all. Okay, you've got a key level where if it starts to get through down at this zone, it's around the 14,855 area, then it's got a few problems. Okay, the UK starting to break down, so that's a trend up we've been sort of following. Looking okay for a while. Once it got up through this 7623 area, it started to pop up through there. It got into the highs here at 7690. They're major highs there, so that's two major levels on the FTSE. It's failed. Okay, we're starting to fail in here. We've got levels that we were looking at the other day, Friday, that will end the week when we did the morning report. Level, I thought this could have held, we could have lifted, we did, but it's flushed straight back down again. So that, to me, I would expect it to get a bit of a run on. So when the market breaks an uptrend or breaks a downtrend, you expect one of two things: either sideways action from there, some consolidation sideways. And in this case, we've broken that downtrend, sorry, that uptrend. You're expecting some sort of consolidation sideways, or you're expecting the start of a new move down. Okay, this is not looking as bad as, say, some of the US indices, but it is starting to break. We're starting to break down now. If US breaks down, the FTSE is going to follow it, and the DAX is going to follow it. It's just the way it is at the moment. US is leading the way. So that's the concern there. We start to head down. We start to test into these levels tonight, maybe 75.50, that area there. Then potentially, we get some lower highs, and there's a start to trend down, way down to this level right down here. Okay, over to the currencies. US dollar rallied. It's been finding some buys. Now, it could be a bit of a safe haven bit into the US dollar, but I think it's got more to do with inflation, and it's kind of readjusting for that inflation. Stronger the inflation, the more likely that foreign exchange, that bid between the two currencies, interest rate differential. So you're going to get, if US dollar or if the US inflation is really good, it puts more upside pressure on the US dollar because of that currency spread between, say, US and Euro, US and Aussie, US and pound. So there's more expectations for better interest rate rises, and that's why they're buying to the US dollar as opposed to other currencies. Okay, and they're starting to sell into those ones, just edging out for the interest rate differential. Okay, so we're looking at that Aussie. It broke through a key level here at 71.80. You can see key level tested off there, tested into it, held it, bounced, tested again, flushed through, retested again, big move down, come back into that zone, failed before we, again, we were trading around it, went through. That was on that CPI number, up, straight back down again. So the market, on those sorts of numbers, even though you might expect it to, Aussie, for example, to push down because you expect the US dollar to find some love, that will chop around, okay, every day of the week. The algos start to work over those numbers. They work over both sides of the market. They don't care which way you expect it to go. They'll work you over. Okay, but now that the dust has settled a bit, and you've got more of your longer term traders, we're reacting down off that level again, 71.80. So I would expect a test into this area, 71.10, potentially, a bit of an extension. Just depends on what happens in the US dollar today. But yeah, I would expect if it doesn't start to test in here, it might grind its way up, get a lower high before the US session, and then start to ramp down and through that area. Okay, Euro's failed nicely. You've got press up, that sort of grind down. Okay, with that grind down, we're expecting to push up, which it did. Pushed up into that area, 114.10, but again, on the back of that CPI number, you can see the chop around that number. And then what we've done is failed, held that 114.16 area with a lower high, great area. Great price action too, so you would expect something potentially like this. If that's the case, we're heading down into that 112.80 area. So I'll be biased short. I'll just be looking for a few of these sellers, because remember, we're on the 30-minute charts. Some of these sellers squeezed out of the action, a bit of a pop, maybe retest into here. I don't know, this kind of a zone in here, maybe retest in here and start to fail. that could give us a nice little lower high to work into, and from move down to that 112.80. Okay, pounds capped at that 136.18 area. You can see it's traded off that area, flushed through, started to react again. So it's not a clear area, and it hasn't traded it too many times. It's traded into it, reacted off, failed again the second time, back into support at 135.22. Imagine eventually made its way back up there again. I think it was over the CPI number as well. Flushed through, failed again. So we're getting sellers into that area. So I'll be looking for more of just some sort of lower high to play out. Okay, but the pound, they've raised rates, so it might be a bit of a different story compared to the euro. Euro is still talking up, maybe rate rises, whereas the pound is sort of starting that cycle. US yen failed, obviously. Bit of a safe haven bid into the yen, which is pressuring that more than the US dollar selling off. The US dollar wasn't, it didn't rocket up, but it was getting supported. Whereas if the US dollar is getting supported and the yen's going down, you're either expecting one or two things. You're expecting big things on the downside for the US dollar, which I can't imagine, or you find that love into the yen as a safe haven. Okay, they tend to buy that like gold, like the US dollar. They buy the yen as a safe haven. Okay, so that's, to me, is more of the action, what's happening. So I would expect to see if this level can hold, we might get that secondary reaction off 115.664 back down into 114.91. But again, I'm expecting, if the markets are positive today on the indices, you might find that there's a bit more of a bounce, and some of that so the yen safe haven buying cleaned out of the market, meaning that they sell back in and we get a bit of a support into US dollar, bit of a move up back to 116.33, but we'll have to wait and see. Okay, gold was a good mover. Considering that US dollar is grinding higher and you get the interest rates didn't move too much, or the yields didn't move too much on the bonds, I think there's a bit of a safe haven into that. It's probably the only reason I see why gold is pressuring higher. It hasn't, unless it's just decided to all of a sudden to start reacting to inflationary numbers, and inflation is a hedge, which it hasn't previously. The whole time we've been talking up rate rises, gold was starting to, it would pop up, get pressured down, pop up, get pressured down. Okay, maybe it's just changed its tune. So you've got to keep an eye on gold. That could easily start to change the characteristics and start to run higher. Now, for me, we probably can't see it, but that's surely a daily zone. Okay, I think we're extended. So on the short time frames, I'm not going to be buying this up here. I want to see a pullback. I want to see a pullback, hold a higher low potentially off this level, 1847, maybe higher, and you could get some sort of flush up. But then you're going to be concerned, which happens with gold quite a lot. Extension, everyone's expecting a pullback. It pulls back, gives them the pullback, comes into the highs, flushes the highs, and straight back down again. Okay, prior to the US Open. The US Open is going to be an interesting one. I would expect the algos to start charging on the downside just to squeeze them out. Now, if it doesn't, starts to hold, then yeah, it could be a nice little run up on gold finally. Okay, we've got oil. We're speaking about this quite a few times now, a few sessions, holding this 88.60 level, held an inside level, started to lift. That's kind of the moves we were after, but we've got this flush into what was it, about 80, 89.40, 89.50, flushed in that, stopped out a few buyers, and then ramped straight back up. Okay, and that was the start, roughly probably. Oh, no, I wasn't actually getting started the European Asian session. Yeah, started the European session, started pushing higher. Okay, so trend definitely up, extended. In my view, we could be looking at something like a bit of grind down. We might be looking back into this level here, or retesting something a bit higher to find a bit of a base. But like I said, if I'm intraday trading that, which I'm not, won't be buying it up here off the 30-minute chart. I'll be looking for more as a little lower high potential. Okay, but longer term the trend is up, but intraday I'll be looking for that as more of a lower high, maybe putting a squeeze on this level here at 92.78. We'll wait and see. It's really getting pushed high at the moment is oil. So we've got copper. Last couple of charts for the day. Copper was bounced up through this level. We're expecting that to break. It did break, and it's come screaming straight back down again. So it's not looking too crash hot, but longer term that trend is up. It's just very choppy. And on a daily perspective, it is stretched. It's had a good run up over many sessions. Let's just go over that. Here we go, change there. Big run up here, big pullback, held this inside level, got sold back into around here. It's pushed back. Maybe what we're looking at longer term is something more like this. It's starting to hold those highs, maybe that's what we're going to be worried about. And then if that's the case, we're going to get a lower high in here again, and we're going to start testing into these levels, okay, in copper. So I think it's a little bit extended on the short terms. Obviously, we've flushed in this level. It's going to obviously a key level to bring in some buyers, brought in some buyers, potentially it's going to start to look to squeeze them out. We might get this kind of a reaction down. Now, to be interesting, because it still is holding, big support zone through here. It was tested, another support zone through here, another support zone through here, and a little inside level. Okay, so it is holding high lows, something to keep an eye on. Definitely, I think longer term, there's really no pressure put on these buyers all the way up if it's that level, but there is the opportunity where this is longer term. It's sort of, we call it a cup and handle. You've got the handle cup. It's looking to expand up. Okay, Bitcoin, not looking too crash hot. You've got that move up to this 45,800 zone, pull back, held, grind back up again and fail off there. We've got even a lower high in process, holding. Okay, so I'm expecting this to test in that 40,000 mark, potentially 41, 42, extended there. So it's going to open up. The market really didn't do too much over the weekend. It sort of went sideways. If the indices are coming in under pressure, like we think, expecting the Bitcoin will too. Okay, it's pretty much reacting along with the indexes at the moment, especially in the US. So, for all the bells and whistles that people have been blowing on Twitter, it is just acting a bit of a risk-off mode. No one really wants to take a hit, especially if you've been buying it through this level, expecting that to go. Talk of it going 100,000. I was talking about that the other day. Every time we get a rally, everyone's on Twitter. All the bulls are saying up 100,000, then they disappear for a while once you start heading south again. So there is dragging in a few buyers, margin calls, all that sort of stuff. Maybe squeezing some margin positions out of the market. And last one, Ethereum. Ethereum is the same sort of scenario. We're into a level here at 29.47. I think that could potentially hold. If that's not going to hold, it might just bounce off that level, hold another lower height and extend down. If it's going to extend down, I'm expecting it to push down that 25.83 area. But, if it can hold up here, yeah, it could be quite nice. We just have to wait and see if that can hold sort of that zone in there, start to bounce, drag in some more buyers, potentially squeeze them out. All right, that's about all I wanted to say. So really just be wary of the markets at the moment. If they open up strong, don't go diving in left, right, and center. I'll be waiting for more confirmation on the underlying index itself, especially in the US. If you're going to be diving into the Aussie markets, if it starts to pop up here, yeah, it could be looking good, but it could be the part of it, suckering in some buyers, and then we start heading down again. Okay, but for now, I'll just be wary in the open, see what happens, see how it plays out before you start jumping into anything. Anyway, guys, thanks for joining me, and we'll speak to you again tomorrow, and we'll see what tonight brings us in the US.